Are you like most sales and other professionals who want to grow their wealth faster than what they are currently doing through their company 401k, even with that company match, the stock market, or just plain saving money? Would you sleep better at night if you had the financial freedom to be job optional in just 3 to 5 years through investing in real assets? Maybe you don't want to stop working, but wouldn't it be cool if you could retire a decade earlier than most and do the traveling you and your family have planned for years while you're still young and can enjoy it? Let's face it, most busy professionals don't have the time or desire to take on more work outside of their W-2 to grow their wealth. On The Wealth Flow, each week we share the stories, the investments, and take a deep dive into the various asset classes that can deliver that accelerated growth to your portfolio passively. That's right, no extra work for you. Instead, we'll put your money to work. Learn what the 95% aren't talking about and join the top 5% of earners today on The Wealth Flow.
Okay, welcome to The Wealth Flow. My guest today is Courtney Moeller. She isn't just a powerhouse in oil and gas industry. She is also a U.S. Navy veteran. Thank you for your service, Courtney. She's also a #1 best-selling author and a dynamic international speaker. Courtney, I'm looking forward to diving into oil and gas with you here today, as well as hearing your story.
Thank you so much for having me as a guest. This is such an honor.
Absolutely. And I always love to just really hear about each of the guests and kind of where they grew up and what eventually led you down the road of oil and gas.
That's such a great question. I'm originally from Midland, Texas. And for those of you that know oil and gas, that's right smack in the middle of the Permian Basin, which is the #1 oil and gas producing area in this country. So my dad was a petroleum engineer. My brother drilled oil. My uncle had a well servicing company. Gosh, my sister hauls water, for oil and gas. So it's something that I have grown up in and been a part of my entire life. I actually didn't think I would end up in the oil and gas space when I grew up, but here we are, and should have known we were going to keep it in the family. But, my dad being a petroleum engineer, gosh, we have lived in Abu Dhabi, Pakistan, and then he drilled in Jakarta for 20 years before he retired. And so it's funny, I went into the Navy, became a nurse, did a bunch of other things and a lot of entrepreneurial endeavors, in between. I was a real estate agent for a while, but nothing quite, I enjoyed what I did, but nothing just quite grabbed me. And then several years ago, I was actually looking to divest into other assets. I inherited my dad's oil and gas company, I think 12 years ago. And I found myself susceptible to the price of oil. And if it's at $80 and above, things were really great. But when it dropped to $20 or sub-zero, it really had a major impact on our lifestyle. And so I thought, okay, I've got to figure out how to diversify so that, when the prices fluctuate, it's not impacting us the way that it was. And, got involved in a lot of other different investments. And this is what was kind of crazy. I was asked to come and speak on a panel with Robert Kiyosaki. And funny story, I was like, okay, I don't know who that is, but yeah, let's do it. So I went home and I'm Googling this guy and I'm like, oh gosh, this is a little bit intimidating.
Kind of a big deal.
kind of a big deal. And, G. Edward Griffin, who wrote The Creature from Jekyll Island, was going to be on this panel. Peter Schiff was going to be on this panel. And so I thought, okay, you know what? I don't know. I don't have a financial background. And then I just thought, let's do it. And it was great. But it was that conference that I learned that people were pooling money together to buy assets. And I thought, God, I'm a pretty smart girl. How have I not figured this out? And so that sent me down, a whole new path, whole different trajectory. And I took what I knew and the connections I had in the oil and gas space to bring those investments to other people. I guess really tax mitigation, offsetting W-2 income, creating really great cash flow is kind of my shtick. That's where I live now. And that's, my big, hairy, audacious goal is to keep $1 billion out of the hands of the IRS.
There you go. That's a great goal. there's a lot there too. I want to go back with how long did you live? Where you said you lived in Pakistan?
We did. I
Wow.
was young. I was really young. And it's funny, gosh, and when I say young, I mean, we're talking like 4 or 5 years old. I was really young.
Yeah.
And it's funny, I'll see pictures of, the people that we had that came and took care of us. We lived in kind of an expat compound for all of the oil and gas workers that were in the country. And I have this woman that took care of me when I was a child, and it's funny. I don't know if my memories come from looking at those pictures or if I actually remember them. So I was very young, during those days, but it's pretty cool to say that, hey, we've drilled, oil all over the world. It's pretty.
Yeah, for sure. Yeah, that's pretty amazing. So, tell me a little bit about your dad's business. What all did you inherited it, but what all did he create? And kind of
No,
what was his avenue, and has some of that changed since you've taken over?
yeah, and this is actually a pretty cool story too. So, he back in like the 70s, one of his really good friends was a geologist and the other one was a landman. And they would go out and find oil in different areas in the Permian Basin. And then they would go and partner with Chevron and Texon and Texaco, some of these bigger oil and gas companies, and partner with them to go and actually drill it. And so he retained, a pretty decent portion of each of those projects with, these bigger companies being the operator. And it's funny, I inherited that company. And so every time I kind of got grandfathered into what he's doing because these big companies don't need private money. They don't need investors. They don't need things like that. But because of the massive amount of mineral acreage that we own and just some of the other things that were put in place, I have the option to participate in everything that they do moving forward, which is really cool. So, we have continued to drill throughout West Texas and expand that. And when I got into the syndication space and I was kind of learning how people were syndicating multifamily and short-term rentals and all of these other things, it was like, okay, how can I bring what I know, into this space? And so that is essentially what I've done. I took, what my dad's company was doing and kind of married it together with this investment space. And it's been a pretty great journey. There's been some really tough, hard lessons and some really great wins and a little bit of everything in between.
Okay. Well, let's maybe talk about a little bit of those. What are some of the lessons that you learned along the way, and and how maybe for the audience as well, just kind of explaining how the audience or potential investors could get involved. What kind of they're bringing money to the table for, what that kind of thing.
Yeah.
I think
No, this is a really good question. And I think people need to talk about this more. Nobody ever wants to stand on a stage or in front of a microphone and talk about the things that didn't work and their failures. And, it's embarrassing. But, when I got involved in this space, I was in with a group that I thought was such a great group. And they said, hey, we're raising money for this oil and gas project. Do you want to be involved? And I was like, oh, they explained it to me and I understood it. And I was super pumped. I'm like, oh my gosh, I understand this. And, I was so honored and flattered that this well-known group was inviting me into their small circle, that I ran with it. I had never raised capital before. I didn't have an investor list. And, but it was a $1.4 million deal. And I thought, okay, yeah, let's make it happen. And I fell a little bit short. Well, through that process, I was asking for, contracts, they were supposedly working with Exxon and a lot of these other things. And I was told, it's under an NDA. We can't share it, but, here's this, here's these patents and here's this information. And, I guess about a year later, I was doing another raise and some questions were brought up. And as I was kind of poking and prodding, it was kind of interesting because at the same time, that new deal was coming up, we started getting production reports and some of the other things. And it was like, okay, this is all internally generated. And I know because I have, 100 of my own wells, I know what those production reports look like. I know how to look them up. I know how to find that. And I said, look, I'm going to need I gave them a laundry list of things. I said, look, I realize the contracts are under an NDA, but I'm going to need a copy of the NDA. I'm also going to need a letter stating, that these guys are working together, just confirming it. I need to see the actual production reports. You can redact the private information. So I gave them a laundry list of things I needed. And I said, look, if you can't provide this information, I'm going to have to walk away. And they failed to do it. And, so within that time frame, I ended up terminating that current raise, refunding the money. And they were really ugly to me about it. And about 5 weeks later, I got a call from my attorney that they had been raided by the FBI and the SEC. And it's actually still under investigation today. And it was absolutely a Ponzi scheme.
Wow. That's crazy. What's interesting about that is, man, if you didn't have the experience that you had, of course you were going with, hey, these guys are experienced or well-known. Man, it's tough out there. It's tough to know for sure who you're working with.
No, and that's one of those things. So I think first of all, the first lesson I learned in that is, just because you've got a really well-known famous person standing on stage pumping and promoting something, that doesn't mean that it's good and legit and that they're good and legit, even though everybody thinks they're amazing. I mean, that was probably one of the biggest lessons. It's like, trust but verify. And, if something in your gut doesn't feel right, listen to that, inner self kind of, causing those little, hey, take a pause for just a minute. And so I was really thankful that I did that. And this was probably a totally unexpected conversation, that you're getting right now. And so, having gone through that, I was really thankful that I, stood my ground and, went down the path that I did. I'm very grateful for that. And so, that lesson of, hey, you can't just trust somebody standing on stage or sitting, behind a microphone. And then not only that, but I really had to kind of figure out, that really knocked me down. I think, there was 1 week where I didn't even get out of bed for a week. When you lose your own money, that's one thing. When you lose your own money and then you lose other people's money too, that's a whole, another level of disaster. And so, just trying to figure out how to navigate that. And, I have a book chapter that I was asked to collaborate on a book. And my entire chapter is dedicated to how do you navigate, difficult times like that. It's so easy to stay positive and focus on the good when everything's going great. But when everything is totally gone to crap, it's really hard to do that. It's really hard to get in the right mindset and really kind of figuring out, instead of focusing on the problem and, starting to focus on the solution was really kind of, between that and then being surrounded by really, really great people. My network and my group is an amazing group. So just having that great support and those cheerleaders and then focus, being solution oriented really is what kind of helped me navigate that and get through it and start over and take what I learned from that and implement it, and not only implement it into my deals, but teach other people, hey, this is what you need to look for. This is what you need to check for. I've got a whole laundry list of non-negotiables now. If I can't have this information, we aren't working together, And so it's really kind of shaped and molded me into who I am today and how I do business. And I'm very grateful for that.
Yeah, for sure. And so how are people able to invest in what, when you're working with investors, what is their money going to? To creating new wells, or what? Tell me a little bit about the ins and outs. I know there's really, what's fascinating about oil and gas and some of the other guests that I've had on is just there's so many facets of it. Some of it's, exploratory, going for different wells. Some of it's taking existing wells and maybe, reinvesting in them. There's just so many different avenues. So tell me a little bit about what your group does.
Yeah, so many different avenues. And our strategy is relatively simple. We are out drilling new wells. We are not wildcatting, which is when you're out, exploring a new area that's not proven. We do not want that. I only work with major operators. We're working with EOG, Continental, Anschutz Exploration. These are billion and multi-billion dollar companies. And actually, they don't even need our money. They don't need our money to get these wells drilled. And, all of my real estate investors are always talking about skin in the game. These major operators own the majority of these projects. And what we do is we acquire anywhere from a, 2 to 15% interest in these wells. And it's not that we're working with these operators directly. I have found somebody else that owned that small, the mineral rights to those wells, and they were willing to sell them to me. So, I want to participate with major operators in the top proven areas in the country. So I'm essentially just buying non-operating working interests in these wells with these major operators. And so that is pretty much the strategy. And a lot of them we're able to acquire after they've drilled. Most of where we're drilling, they drill and then they frack and then they bring them online. And so, probably half of the projects in the last year and a half that I've done, we were able to acquire after they've drilled. And the reason I like that is because during that drilling process, they're able to determine if they've got commercially producible oil in those wells. Well, if we're with a top operator, proven area, and we now have confirmed oil in the wells that we're drilling, we have minimized so much of the risk in drilling oil that, now that really just leaves us to what is the price of oil going to do and how are these good wells going to produce? What is their production going to look like? And it doesn't matter what oil and gas operator you invest with, they're susceptible to those two things. Every single one of them are. And so, I can't guarantee the performance of a well, and I can't guarantee what the West Texas, intermediary is going to do. But if we're in a good area, great operator, and we know we've got oil, we've eliminated a whole bunch of the risk that comes with operating and, exploration and drilling.
Yeah, for sure. And Courtney, are most of these going to be kind of in that West Texas area, or are they going to be all throughout the U.S.?
So there are a few major areas in the United States that I focus on, and obviously Permian Basin is one of them. The Niobrara area, which kind of extends from Wyoming down into Colorado, is the top, producing area there. We've got the Bakken. Those have been my three primary focuses right now. We've got a lot of really good natural gas up in the Pennsylvania area. I own some wells personally in that area. I think we're going to see a really strong natural gas price here over the next year or two. So if we have the opportunity to acquire some interest with some of these operators in that area with just natural gas, we'll go that route. Most of the wells that we're drilling now do have gas in them as well, but they're primarily oil. They're mostly producing oil.
Okay. And that's pretty common, right? For a lot of them to have a combination of the two, but I guess there is a primary one that you're going after in most of these. Yeah.
Correct.
Okay. And can you maybe for the audience explain, back in the day, whether it be the Beverly Hillbillies or whatever, you think of like, this oil that just comes shooting out of the ground. But, a lot of that, while there is still that, right, you can still tap into some of that. But primarily a lot of it right now is what? The fracking. And kind of what's the difference in what is the requirement difference to do fracking versus just drilling a standard well?
Fracking has really changed the game for the oil and gas industry. And I'll tell you, so we've, out of the 28 wells that we've drilled in this last 15 months, 25 of them were in the Niobrara area, in that Wyoming and Colorado area. And they started drilling in the Niobrara back in, I want to say like in the 60s. We'll call it the 60s. Well, they didn't start fracking until 2008 in that area. And what fracking has done is, let's say you've just drilled a regular vertical well. You just went down, 10,000 feet. Most of these wells that are in these shale areas are, 10,000 foot wells. So you're talking about a couple miles down into the ground. Well, when you frack, those wells go horizontal. So most of the wells that we drilled over this last year and a half, they go 2 miles down and then they go 2 miles horizontally. And so that horizontal, that 2 miles sideways, and they'll go in and, they go in and kind of break that rock up, which allows that, oil to flow so they can capture all that oil. Well, when you go 2 miles sideways, what that has done is where maybe some of these wells weren't drilled in the right places, that, having a line for 2 miles out allows you to capture significantly more oil than just that vertical well. And you need it to. So, fracking these wells is going to increase your production anywhere from 2 to 7x. But it is significantly more expensive, to drill sideways like that. But it does produce a lot more oil.
Okay. Yeah, and it seems like it would allow, if you've already know that a vertical wells produce something, like you said, to be able to go now and frack it.
Well, and some of them, what's even great is with the current technology, when they're able to find a little more of those pockets and things like that. So if you've already got a well in one spot and you're like, wow, we just need to go 500 feet over and, tap into that other reservoir. Now they can take that, vertical well, they can add that horizontal addition on, and they can tap into oil that they were not even getting initially. So a lot of them, they're going in and re-drilling, adding some fracks and things like that, and capturing so much more oil than what was before. So the amount of production in the Niobrara, I think before, wells were expected to produce, I think initially it was like 250,000 barrels over their life. And it's really pretty standard now for most of these wells to produce about 800,000 barrels. And we actually have a project that we just did, and they're anticipating these to produce like 1.5 million barrels, which is crazy. And so It's exciting, though.
That is exciting. That's really cool. And so let's maybe talk a little bit about, first of all, we're recording this at the beginning of 2025. Obviously, we have a new president and with a great theme of drill, baby, drill. But what is that going to do to the price of oil? And what are maybe, what do you see, kind of in the next 3 to 5 years with respect to price of oil?
Nope. This has been kind of the number one, question that I've gotten over the course of this last 6 months. What's going to happen if Trump gets into office? And typically when we have a Republican president, we have lower oil prices. And he has been touting this drill, baby, drill, for quite some time. And so the great thing is, the last administration were not approving permits and things like that to drill. So what has happened is we have not been doing the exploration and drilling we need to do to keep up with the continued growth in demand. And so even though Trump wants to come out and drill and he's going to make getting permits much easier and faster, that's great. The problem is that we have a really major gap in the exploration we needed to do to keep up with that. It's going to take years for us to increase that production and make up for that gap, if that makes sense. They can't just turn on the wells. And here's the thing, each one of these wells that I'm talking about, these, wells that have to be fracked, you're talking about, $10 to $15 million per well to go and drill those, so there's a limitation on how much, these companies they can't just be like, okay, great, we've got the thumbs up, let's go drill, 500 new wells. That's a significant amount of money. So, just because they're willing to do that doesn't mean, just because they can doesn't mean they're going to. And a lot of the oil and gas companies I've spoken with, they don't have any intentions of cranking things up, right now. They've kind of found that sweet spot of costs and operating and everything else. And so I actually will be at an oil and gas conference in Houston next week. So I'm going to have the opportunity to kind of really talk to a lot of these major oil and gas companies. And I'm going to be doing some hot mics and interviews with them just to see, kind of what their company strategy is and what they're going to be doing. But just another point, right before Biden left office, he eliminated the ability for offshore drilling all around the United States. And so offshore production represents about 15% of the United States production. So I'm sure Trump's going to find a way to reverse that. But I was talking to my husband and he said, yeah, what Biden did, he made it really difficult. I'm sure they'll find some loopholes or something else, but they'll find a way to reverse it. But that's going to have an impact too. So I think eventually will we have it turned up and kicked up and producing more? Yes, but we're not. It's going to be several years before we see that. And I think, everything that I've looked at, is looking at anywhere from, $60 to $90 oil in 2025, which is a great price to be at.
Okay, great. And then on natural gas, do you see anything with respect to that? Any changes there? I mean, it seems like we're opening that up as well, or at least the ability to use natural gas under a Trump administration is it's more favorable than how it was looked at before.
Yes. Well, here's the thing. So a lot of these European countries that were moving to clean energy, solar and windmill power, they are now squashing all of that and they're going back to natural gas. Well, I mean, we have probably the biggest natural gas reserves. I don't know if we have the biggest in the world, but we've got a significant amount of that. And so everybody I've talked to, they are really expecting the price of natural gas to go up, and we have the ability to provide a significant amount, overseas as well. So I think we're going to see some really great things happening in the natural gas space.
Awesome. And so tell me a little bit about what a typical investment looks like when it comes to, investing with oil and gas. And then you mentioned kind of at the head of the call when we first started talking about being able to offset W-2 and income. Can you speak a little bit to that as well? And what is different about that versus other maybe asset classes when it comes to being able to offset your W-2?
Yeah, gosh. Okay, so the tax part of this is probably one of my favorite things. It's one of my investors' favorite things. I tell people ahead of time, don't ever let, the tax tail wag the dog, never
Sure.
make an investment just for the tax, benefits. But oil and gas is very special when it comes to the tax benefits. So it was something that was written back into the tax code back in like the 50s to incentivize exploration and drilling because we need oil for everything. It is in plastic, asphalt, computers, medical equipment, cosmetics. It is in everything. People don't realize it's so much more than just fuel for your car. And I'll give you just a quick little blurb on that. A barrel of oil is about 42 gallons, and these are rough numbers. This is not exact, but about a third of it goes to gas for cars. Another third goes into all of these products that we use regularly, and the other third is going into diesel and jet fuel, diesel for farm equipment and things like that. So it's interesting to see where that oil is going and what it's being used for. So
Yeah.
back to your initial question, the tax benefits are amazing. So every single project's going to be a little bit different. So you always want to find out, where the money in the project is going, how much of it is going to something called intangible drilling costs. And so intangible drilling costs are things like fuel and labor and the intangible things that go into drilling those wells. They are what can offset any kind of income, W-2 income, active income from other investments, capital gains, passive income. It can literally offset any type of income you're getting just from making the investment. And it has to be a working interest. And so I don't know of any other asset class where you don't, like being a real estate professional, you've got to put in, 750 hours in a year. There's different things that you have to do. And, for some of my doctors and lawyers and business owners, they don't have time to become a real estate professional. And so oil and gas investments are a great way for them to offset some of that W-2 or active income without having to actively be involved. And so we have tried to minimize the risk in that so much so that, they don't have, you're always going to get the tax benefits. So you make the investment, you're going to get the tax benefits. You're never going to lose that. So at least there can never be a complete 100% total loss. But I think the strategy that we've done, we've minimized a lot of that risk as well, which I'm very proud of. But most of our investments, let's say you make the investment, typically we're already at least halfway through drilling. We're at least along in the process. We're not coming in before they've gotten permits or anything like that. Not saying that we won't ever offer that, but the majority of our stuff, they have already started drilling. So we've bypassed a lot of the potential delays in permitting and things like that. So you make the investment, you get that tax deduction, and ours typically fall in that 80 to 90% in the year that you invest. So let's say you invest $100,000, you're going to get somewhere between an $80,000 to a $90,000 K1 loss the year that you invest. Now, I've seen other projects where they're also mining Bitcoin, they're doing other things. Well, that means some of that money's going into those other things. So you might have only 50%, depreciation in that year. So each project is going to vary. So make sure you pay attention to that. But you make the investment, and we typically are able to start distributions anywhere from 3 to 6 months after we've closed up the deal, and so we like that. Now, the one caveat to this is we cannot start distributions. It's totally up to the operator on when they start. Now, we start earning the day the wells come online, but we don't have any say in when the operators, start the distribution. So it could be 3 months, it could be 5 months. And sometimes that not knowing is tough, especially if you're brand new to oil and gas investing. You're like, oh my gosh, you said 3 to 6 months and now it's been 5 months and what's happening? And, so I think definitely managing those expectations is important. And it doesn't mean there's any problem. Some of these bigger guys like EOG, they're just slower to get things, to get their paperwork and everything done and started. So that's important to know as well. It's not like a small operator that I can call up and say, hey, quit dragging your feet, get this going. EOG's drilling 200 wells a quarter, and that's, significant. And they've got hundreds and thousands of employees, and it's not as easy to contact them. And so there's some give and takes to that strategy. But I want to come back to the tax benefits. We are really confident in what they're doing. And once you get those, intangible drilling costs in year one, the really cool thing is you get what's called a depletion allowance. So on all of the income that these wells produce, you're going to get a 15% depletion allowance, which means you're only paying taxes on 85% of the income for the life of those wells.
Wow. Okay. That's interesting.
Yes.
Is that something, that depletion allowance, is that taken each year? If basically 15% is withheld or held back or able to be applied?
Yep. You get that 15% deduction every single year on all production from those wells.
Okay. And is there any of the, with regular real estate assets, commercial, when you're doing like a cost segregation study, obviously our bonus depreciation has gone down. Hopefully that's going to change, with the new administration, but it's slowly kind of being phased out. Does this kind of deduction or depreciation that you're taking year one have anything to do with bonus depreciation, or it's just a separate deal altogether?
It doesn't. It has nothing to do with bonus depreciation. And I'm actually glad you brought this up. There is no recapture. So you don't have to worry. That money was, you're getting that depreciation in year one from the intangible cost of drilling the wells. The wells got drilled. They can't come back and recapture that in year 3 or 5, or, if you were to sell your interest or something like that. So no, there is no recapture on that depreciation.
Oh, that's a big deal. Okay, cool. That's fantastic. Yeah, because, we get that bonus depreciation, but then if we sell 4 to 5 years later, if you're reinvesting, you're usually going to be okay, but right. There is an opportunity to get that recaptured. So great point.
Yeah. Well, and, I didn't even finish my whole thought. So our investments, typically, you make the investment, you get your depreciation year one, and we are looking to return capital, in a 12 to 24 month time period. And so really the biggest factors are, what is the price of oil doing? When we were sitting at $90 a barrel, $85, $90 a barrel here a year and a half ago, obviously capital was returning a lot quicker than we were, we've been sitting around, 65 to 70 right now. So I think, it just depends, but we are always looking for something that's going to 3 to 4x your money within about a, 7 to 10 year time frame. And then, you've made the investment, you get your money back, hopefully in, a year and a half to 2 years, at today's current oil prices. And then you're going to, 3x your money within the next few years. And then we don't sell those wells. We keep them going. You've, multiplied your money, and now you're going to continue to get mailbox money for those wells for the life of them. And a lot of our projects are going to produce for 20 plus years. And so the bulk of, let's say those wells are going to produce 800,000 barrels, probably 80% of that's going to happen within that first 7 year time frame. So you're getting the bulk of that initially anyway, and then the rest of it'll kind of trickle in. And hopefully some of them, some of these wells are going to underproduce, some of them are going to do what we thought they were going to do, and some of them are going to overproduce. So that's why we want multiple wells. And that is another key for any of those listening. Do not ever invest in a project that has one wells. For me personally, I have a 4-well minimum. We won't do anything less than 4 wells. And, the more wells you have, the better, because if you've got 1 or 2 that are underperforming, that's okay. Because if you've got 10 wells in your package, you're gonna end up with a couple that are overperforming and then some average ones. So they kind of even each other out, if that makes sense.
Okay. No, that's important to know. And that's interesting as well. So you look at just, it has to be at least 4. How many are in a normal deal then?
It really just depends. I did a really small last minute deal for some investors in December, and we were able to pick up a small, like 1.6% interest. It was a 5-well package with Anschutz in the Niobrara. And then we were also able to grab a small, 2% interest with 3 wells that Continental's drilling up in the Bakken. And so we put them together, and it ended up being an 8-well package for that, small deal. The one before that was a 4-well package with another group in Colorado. And the very first one I did was 12 wells where Anschutz was drilling in a certain area. So all of it varies. They might be drilling 4 wells, they might be drilling 12. It's always going to vary, and it's going to depend on where they're at, where they're drilling, and what they're doing, and what the goals of the project are.
Okay. That's interesting. And so this is one of those things that once you've invested in, there's an opportunity to potentially get your money back within the first 24 months or so. And then after that, you're starting to hopefully 3x plus your return, and then it just continues to trickle in after that.
It does. Yeah.
That's great.
The goal. And so, when we are acquiring these projects, when they're already drilling, we pay a lot more for them. And so it's a lot more expensive than before they've started getting permits. And the reason I do it that way is, especially if we're putting investors' money in it, we're giving up some of the potential earning by coming in later in the project. But by doing so, by coming in when we know we've got oil, we know we've got good wells, we've minimized so much of that risk, but we're giving up some of the upside in coming in at that point. And to me, I'm good with 2, 3, 4x my money with, an 85% deduction. Like, I'm good with that. Had we come in before they ever even got permits, could we 5, 6, 7x our money? Sure. But there's a lot more risk in that. Not as much with a lot of the major oil and gas companies. It's a much bigger risk with some of the smaller operators I've seen. Obviously, if Chevron's going to go drill 10 wells in an area, they've got the best technology and the best, landmen and geologists and everything. So I'm pretty confident. In betting on them. And that's essentially what I'm doing. I'm betting that these billion-dollar companies know what they're doing, because they do. They're actually really, really good. And they don't have very many delays in drilling, and they get the job done. And they've got 20 other projects lined up behind the one they're currently doing. And so they get in, get it done, and they move on to the next. And I like that. I've had a small operator I invested with, and for a year they were trying to drill this well. And I thought, well, I've never even seen this in my life. Like, I've never seen it take this long. This is insane. And it drives up the cost. And a lot of these smaller operators don't have the pockets to take care of that. So if they're hitting snags and stuff's breaking, they're coming back and doing capital calls, and we don't have to deal with that with these major operators. So there's a lot of benefits. There is some give and take to it. Like I said, we're giving up some of our upside by coming in, and we don't have control over, when distributions start, but I know we're going to have good oil. I know we're in good areas, and I'm really confident in what the project will do. So I'm willing to give up a little bit of that control to be really confident in the deals that we're doing.
Yeah, it makes sense. There's so much that can go wrong, if you don't have all the permits and everything in the beginning. So yes, you are giving up some of that. Would that be what you called wildcatting when you don't have permits, or is that?
No, wildcatting is when you are out drilling in an unproven area. You don't even know if there's oil there or not. And we do not participate in wildcatting at all. I will never ever raise capital for a wildcatting deal. I guess I should never say never. But that is not with investor money. That is just not the playground I'm going to play in. And it is, like I said, I don't want to go spend $10 million drilling a well in hopes that there's going to be oil there. I'll pass.
For sure. Yeah. And the technology, like you mentioned, these billion-dollar companies have some amazing technology. How has you've been in this industry in some form or fashion, or at least in the family has for years. How have you seen it change over the years? I mean,
you would think it would be even better than what it is. I feel like with technology today, they ought to be able to do some kind of like snapshot of the ground and know exactly this reservoir here is, 1 mile wide and, 5 mile, I feel like they ought to be able to grasp that. But we're not quite there yet. Now, I did have a conversation with a company here recently that is utilizing AI and mud logs and things like that from these wells to tell people exactly what that information is. So I'm really curious. We're going to take a look at that, and I'm really excited to see how that technology transforms over the course of this next decade and see how it improves recovery, oil and gas recovery, and the estimates for the reserves that are in places. So it will be interesting. It's definitely better now than it was, 40 years ago, but there's still a lot of room for improvement.
Yeah. Yeah, it'll be interesting in all industries, kind of how AI affects it, but that it does seem like you'd be able to feed the data into, AI and just be able to really look and say, okay, wait a minute, it's got to, you should be able to get better parameters when it comes to where you can drill. So interesting.
Yeah,
for sure. All right. And then, so let me, I guess, first, why don't we go to this, and then I've got a couple other questions for you. But where can people find out more about you, Courtney, if they want to invest, if they want to follow what you're doing out there?
Yeah. Well, I have a website. It's CourtneyMoeller.com. LinkedIn is probably the best social media spot to find me. I am not great about social media, but I am really trying to make an effort this year to be, have a presence and be on there. And then I have an oil and gas report. So if somebody wants to dig more into the tax benefits and things like that, you can go to oilandgasreport.net and get my oil and gas report.
Okay, fantastic. And then what about just from a minimum investment standpoint? What should people be able to expect
So my minimums are always 100,000.
Mm-hmm.
For people that are new to oil and gas, I will do some give and take on that because I want people to be able to come in and experience the asset class in a way that they're comfortable. So I do compromise on that sometimes.
Okay. That's good to know. And what are maybe some other things that, I asked you about quite a few things, Courtney, but I'm sure, is there something that I didn't ask that you'd want to be able to convey to the audience when it comes to oil and gas and investing and kind of what you see in the future of it?
The one thing that I do want to share is that anytime that you're assessing, and I think a lot of people are very intimidated by oil and gas investments because they don't know how to vet them. They don't know how to look at the information. I feel like that in a lot of other real estate classes. I don't know how to do it. And so one thing I do want to share, though, is any of these interests that are owned are recorded at the county level, just like real estate is. And you can verify that ownership. Ask for those wellbore recordings and things like that. And then every single well in the United States, every single state has a, governmental agency that regulates all that oil and gas data. For Texas, it's the Texas Railroad Commission. So you can take the county recordings, the tax recordings for those mineral rights to make sure whoever's doing the raise actually owns it. And then you can go over to the Texas Railroad Commission and make sure that the operators you're working with are the operators that are actually working those wells. And then you can even verify, once you start making money, you can verify production, that, oil and gas production and the permits, the latitude and longitude. I mean, all of that information is recorded on those sites and it's public. It can be accessed by anybody. So I would just say to, trust but verify and make sure, verify ownership and, utilize those resources that are out there to verify what you're looking at.
Okay. Yeah, because they're going to have to be paying some form or fashion of a tax of some sort, right? Based on the volume that they're producing or drilling. Is that why it's regulated in the sense that they know exactly how much that particular well's producing, or what's the?
Yeah, obviously they've got to regulate it because the country needs to know how much oil is being produced. And, these oil and gas companies can't falsify. I mean, falsifying oil and gas data, it's a felony. It's a major, major crime. And, I'm not saying it doesn't happen. I'm sure it does. I haven't ever experienced that personally in, all of the time that I've been involved in oil and gas. But yeah, I share, those county recordings, and then I, share links to those, state websites where people can go in and verify the information I'm giving them. I think transparency is very important.
Yeah, I think so too, and I think you're right. It's one of those things that, if you're not around it, obviously it's unfamiliar, and to just that would make it feel a lot better and a lot easier for a lot of investors just to know, hey, look, where can I just double check this? Where can I look? Yeah, that's perfect.
Absolutely.
Well, cool. This has been awesome. I always learn something new with each guest, and Courtney, this has been great. I've got two other questions for you that I ask every guest. One would just be, any information or any advice rather that you would give somebody who's maybe just starting out in their investment journey.
Oh, advice. I would say, one of the mistakes that I made when I first got involved in this space, I was so excited to invest in assets outside of the stock market that I invested in a whole bunch of asset classes that I didn't understand, and I didn't understand how to do the due diligence, and I got my butt handed to me through that. So it was an expensive, learning lesson, but it was an education, and education's expensive. So some of those mistakes I won't make again. So I would make sure that find the people that are good at the asset class. Ask questions. I would say ask questions. Make sure you understand what questions you need to ask, and make sure you're doing your due diligence.
Yeah, I think that's great advice. How about a book recommendation? Doesn't have to be oil and gas related or even, investment related, but it certainly can be. Just something you've read that's been impactful.
Yeah. So, I am going down this control everything, own nothing path. And I just finished reading What Would the Rockefellers Do? I mean, literally just like a week ago. And it was such a great book. That is actually the book that, if I could go back and give advice to my 20-year-old self, I would say, hey, you need to read this book. And it starts off talking about, the Rockefellers and the Vanderbilts, and they both built these, massive amounts of wealth a long time ago. And, since then, the Vanderbilts have lost everything, and the Rockefellers have continued to grow their wealth. And there's now like 200 Rockefellers that, are living off their family trusts and insurance and everything that they have in place. And so that book is kind of that foundation for really building, creating a legacy for generations. And, I've been going down this path for a few months now, creating trusts and things like that. But it's so much more. I want to make sure that my kids are educated and my kids understand, how to continue on that legacy and how to use money smartly. So we're, implementing family wealth meetings and, things like that. So that's kind of the book is kind of the basis of that. I wish I'd read it, 30 years ago.
Yeah, I don't think we've had that recommendation, so I'll have to check that one out myself.
Okay.
Sounds good. All right. Well, Courtney, this has been great. Thank you so much. And I think we'll call it a show.
All right. Thank you so much for having me.
Absolutely.
Being that you're still here, I trust you found value in this episode. I personally wish I would have known these guests and strategies when I started my wealth creation journey. Go to wealthflow.capital to subscribe to our newsletter. And as a free gift, we will send you our quarterly market report and the top 10 things to look for in an investment opportunity. Take a minute to give our show a rating and review. Help us reach 1 million professionals by subscribing and sharing this episode with someone you know who could also find value in it.